It's been another really fascinating week for economic data. What's going on for households and jobs? Jane Foley of Rabobank. First of all, inflation, cost of living increases. What's happening there?
Well, the cost of living is rising at a very strong rate. It came in at 2.8% year on year. Now, that didn't create any surprises for the city. It came in as economists anticipated. But we've got to remember that the Bank of England targets CPI inflation at 2%. So we really are still having a period of strong inflation in the UK.
So just explain a bit more about what inflation is. What's actually increasing in price?
Well, it's the cost of living. Now, what we've had is a lot of price rises in energy. Our gas bills, for instance, have gone up quite a lot. In the past few years, we've seen oil price, petrol prices go up quite a lot, although not so much this month. And of course, food prices, every now and again we see strong food prices. Now, all of those items that we have to buy, we have to put petrol in our cars, we have to buy food. And because these prices are rising quite strongly, or have risen quite strongly, it means that we have less money from our wage packets to spend on other items, perhaps clothes, perhaps holidays, perhaps entertainment.
And what do we learn about pay rises?
Well, we learned in pay rises that pay rises are much lower than the cost of living rises. And this means that every month we have less money in our pockets after spending on those items that we need to buy.
David Tinsley of BNP Paribas. We also had unemployment figures and quite a big increase, 70,000.
Yeah, that was a large increase. I mean, the big picture is the labour market has had a good run over the last 12 months or so. Employment's been rising and unemployment's been falling. But that now seems to be petering out, unfortunately, and it looks like we're going to be in for a period where, at the very least, unemployment will stop falling. It may even rise a little.
So does this mean a major turning point, do you think, for the labour market, or is it too early to say?
I think it's too early to say on that one. I think for now it looks like we're entering a period of relative stability in the labour market, but the risks are that the unemployment rate will start to rise, and that will obviously also impact how people feel about the economy and how much they're prepared to spend.
We did learn from the figures, didn't we, about so-called inactivity, people moving into the workforce. Can you just explain that?
Well, inactivity has been falling over the last year or so. So in other words, people are moving out of inactivity into the labour market. They're looking for work. One of the reasons behind that might be, for example, some of the benefit changes that have taken place over the last couple of years, which are pushing people to look for paid work rather than draw benefits.
Jane, we also had retail figures. What did that tell us about the consumer?
Well, the retail figures for March were weak. Now, one of the reasons for that was cold weather. Generally speaking, cold weather means that we stay at home, we don't go and spend. We didn't buy those spring outfits, for instance. But of course, we did have stronger retail activity in February, and in all, in the first 3 months of this year, there's a little bit of an increase in retail activity relative to the final 3 months of last year.
So what does it mean for the overall economy, the value of all goods and services, the so-called GDP figure? We'll get that next week for the first quarter.
Well, it's probable that we'll get a small increase in growth in the first quarter. But again, we've got to put this in perspective. We had a warning from one of the Bank of England policymakers the other day that growth in the first quarter could be negative. It could be a contraction. And because we had a contraction in activity in the final 3 months of last year, we could technically have a triple-dip recession if that happens.
David, how do you see it?
Similar to Jane, I think we'll get a small increase in output in the first quarter. But I think it's a bit of a sad indictment about the strength of the economy that we're talking about either small increases or small decreases. We should be looking for much stronger growth, really, if we're going to get this economy back to moving forward.
David and Jane, thanks very much. Those growth figures or non-growth figures will be out next Thursday, the 25th.